Yeah, so what we're really focused on at Unlimited is how do we replicate the types of returns that hedge fund managers are pursuing on a day-to-day basis. With the idea being that if we can follow how these managers are positioned and we can bring those strategies to investors at a much lower cost, they can get the benefits of the alpha generation that these managers are producing on an ongoing basis without having to pay the substantial fees that exist. During my time at Bridgewater in my later years there, and then also during my time on the private side of 2 and 20, I increasingly saw that 2 and 20 businesses were very good for the managers and not that great for the investors. And the reason why that is that 2 and 20 asset managers, hedge fund managers, they generate pretty good returns. The problem is that they charge very high fees to their investors. And so they basically take all of the alpha for themselves, leaving investors not that much better off. The whole focus of Unlimited is really to bring the concepts of diversified low cost indexing, which has radically changed stock and bond investing over the course of the last 50 years, and bring that to the world of 2 and 20 to create investment products that are a better deal for investors and where a wider range of investors have access to those strategies. At its core, what we've done at Unlimited is built a set of technology that allows us to look over the shoulder of 2 and 20 managers, for instance, hedge fund managers, see what they're doing in close to real time, and then take that understanding and translate it into long and short positions and liquid securities, which we can use to build investment products in the market, whether it's a index product, which is sort of capturing, fast following how asset managers or hedge fund managers are positioned, or whether we use that understanding and combine it in a more efficient way through agile allocation between different strategies in a way that creates essentially a better multi-strategy approach than exists today. Yeah, so what we're really focused on at Unlimited is how do we replicate the types of returns that hedge fund managers are pursuing on a day-to-day basis. And ultimately, when you think about an asset management area like hedge funds that that has $5 trillion of assets and thousands of managers, ultimately what those investors are exposed to in one form or another are the largest, most liquid markets in the world. And so what we're really focused on at Unlimited is using our technology to understand how hedge fund managers are positioned in those 50 or 60 largest liquid markets at any point in time, with the idea being that if we can follow how these managers are positioned and we can bring those strategies to investors at a much lower cost, they can get the benefits of the alpha generation that these managers are producing on an ongoing basis without having to pay the substantial fees that exist. Part of starting Unlimited was drawing on the decades of experience in the asset management business, and in particular understanding how hedge fund managers and also how venture capitalists and private equity managers, how they think about their day-to-day investment approach. And so in a lot of ways, what we're doing today is drawn on the foundation of what I was doing at Bridgewater for many years, Bridgewater and Circle Up for many years, which is, while I was there, I was developing the proprietary investment approaches and engaging in the ways of thinking in asset management, which today I now look at and try and generalize across different asset managers through time in order to build our technology, which replicates how all asset managers, how 2 and 20 managers are positioned. And so in a lot of ways, what I'm doing today is getting above myself in terms of what I was doing before. And instead of thinking about the specific investment strategies that I was developing, thinking about how I developed those investment strategies and thinking about what are the types of approaches that I was using at the time that are common amongst asset managers. So sort of drawing on that experience, but taking it and using it to in a different lens or a different light than I was doing before. One of the things, when I was starting at Bridgewater, when I was at Circle Up, I had teams of many people who were working on the investment strategy, and part of the genesis also of Unlimited and using it was in terms of using technology to understand how managers were positioned, was recognizing that I wasn't going to be able to right off the bat have a team of hundreds of people working on investment strategies, and instead had to figure out a way to do that in a way that was much more efficient and recognizing of the more limited resources that I had available. And so I think in a lot of ways what it did is it helped sharpen the view to looking at what are the most important things that you need in order to be successful, and really focusing on those. And then I think the other part of it is recognizing sort of the enjoyment of doing it all from the beginning to the end. I in many ways, growing up, worked in a lot of sort of entrepreneurial type environments. And even when I went to Bridgewater, it was a very entrepreneurial environment when I started there. And so for me, I really enjoyed coming back to that sort of environment, where a lot of the excesses that exist in bigger and bigger organizations could be put aside, and we could focus on the day-to-day goal of developing technology that made 2 and 20 strategies available to everyone for a much lower cost. It's always a challenge when you're just getting started, and I think part of the benefit was I got to sit for a period of time on the allocator side of the venture world, and so saw and understood how folks thought about incremental investments, particularly high risk early stage investments. And I think the key thing there for folks who are just starting out and looking to raise capital is there's basically two big things that you have to convey to prospective investors. The first is that you have an edge of some sort, a unique insight, solution, approach to solving a problem, a meaningful problem, for whether it's in financial markets or in a totally different area. And the second thing you need to be able to convey is a sense of scale. That's a very important part of it because investors are always thinking about how big could this get if you are successful at actually developing and commercializing the opportunity. And so when we were thinking about Unlimited, we looked at our edge or our unique solution to the problem, which was a next generation replication approach to what 2 and 20 asset managers were doing, that we could prove out or test to show worked quite well. And then we were talking about the scale. We conveyed to folks, the 2 and 20 asset management business is a $700 billion a year fee generating industry, that looks the same today as it did 40 years ago. Even disrupting that a small amount would create a wildly successful business. And so those two pieces together are really the key attributes that you need to have in place when you're conveying your opportunity to prospective investors. When allocators are thinking about putting money into early stage investments, whether they're a venture fund or an individual allocator, they're thinking about the market opportunity or the opportunity. They're thinking about the quality of your solution to that problem. And then the last thing that they're thinking about, which is a very important piece of it, is they're always thinking about team. and what's the nature of the team that's been brought together in order to pursue that opportunity. And um, and the reason why that is that any successful business is really dependent upon the holistic team and accomplishing. We lionize the sort of the Titan founder, and the reality is that any successful business is built upon a strong team, a strong core team of 6 or 8 people who are the people who come in and take any idea from the 0 to the 1 to 100. And so whenever an allocator is thinking about an early stage company, they're really thinking about what is the nature of the team, and in particular, what's the quality of the partners that, say, the original small handful of founders. What's the quality of the next stage of partners that they're able to bring in? Because if you can find and attract very high quality talent beyond the sort of core original first couple of people, what that highlights is that you're going to be able to build a bigger enterprise that's going to be able to scale that business more successfully. For most investors, they're stuck in some form of 60-40, 60% stocks, 40% bonds. And a big reason why that is because there's not a lot of other investment opportunities that are available to them. If you're a big institutional investor, roughly 50% of their capital is allocated to alternative investment approaches, things like hedge funds, private equity, venture capital, et cetera. But for the everyday investor, there really isn't that opportunity. And so when we started Unlimited, what we were really focused on was how do we create low cost index products for the alternative side, the 2 and 20 side of the optimal investment portfolio, by and doing that in a way that would make those returns or those approaches available to every investor. So whereas 5 years ago, if you were a small scale investor, you wouldn't have the ability to invest in hedge fund style strategies. Today, through the use of a ETF structure, you could have $20, $200, or $20 million and get access to the same quality returns as the biggest institutions in the world. We're primarily focused on building a set of products around this central technology. And so if we sort of connect back to some of the things we were talking about before, this idea of what is your edge, and then building from your edge is sort of foundational to building a great asset management business. And so for us, our edge is having developed a set of technology that allows us to replicate how investment managers are positioned. And then we can use that edge and package it in a number of different ways. In some cases, we're proposing ways in which investors could use the product. For instance, in our index product, we're basically saying, here's an efficient part of your portfolio that an advisor or an individual investor could include in their portfolio. In other cases, particularly in our work with institutional investors, we'll have conversations with them about what are their unique set of needs and preferences and targets. And we can use our technology in a way that can package that set of replication understanding in a way that's responsive to their needs. And so it's this balance between seeing what the market should have and putting that out there with being responsive to what certain allocators are thinking about and prioritizing. But all of it is built on edge. You start with edge and then you build products from that rather than the other way around. Part of the work that I was doing at Bridgewater, which was developing investment strategies across a wide range of different asset classes and approaches, was really getting immersed in understanding how hedge fund managers think about different investment strategies and approaching different investment strategies. And that set of understanding is really core to the technology that we've built at Unlimited. Between my co-founder Bruce and I, we have 50 years of experience in the hedge fund business, and we've basically built proprietary hedge fund strategies across all the major hedge fund styles. That's critical information and understanding and experience that's needed to build technology that replicates how those managers are doing. Too often, people start with the technology and then try to replicate the expertise, when a much more efficient way and a much more uh, durable way to do it is to have the expertise and leverage the technology, which is just really just a set of tools, to build that replication approach. At its core, Unlimited's technology starts with an intuition that many of us have who have been in the investment management business for a while, which is we're often looking at a manager's returns. We know basically what type of strategy they're pursuing. We know what's happened in markets over a period of time, and we can basically back out or infer how they must have been positioned. Did that equity long short manager, were they overweight tech or underweight tech? Or, did that macro manager overweight bonds or underweight bonds to get the return outcome that you're seeing? And so what we're doing at Unlimited is taking that basic intuition that folks think about all the time, and applying a more systematically rigorous way to approach it. And part of the key insight is that, anytime we look at a manager's returns, those returns are an outcome of positions that existed at the time that those returns happened. But those positions are not independent of previous periods outcomes. Positions are continuous, and therefore they're path dependent. And so a big part of our machine learning edge is recognizing the path dependency of positioning, which allows us to infer how investment managers are positioned today in the context of the pattern of returns that we've seen through time, and the types of and the positions, the probabilistic positions that they must have had on through that period of time in order to get the return outcomes that they've seen.